Just 24 hours ago, the crypto markets were extremely fearful. Yet fast forward to now, and that fear has subsided. So, is now the time to be buying into cryptocurrencies? Have we missed the boat? Are we seeing a dead cat bounce? And how do we know whether we are seeing a dead cat bounce and whether we should be waiting to be buying cryptocurrencies? So we're going to look at in today's video and look at some of the past examples that have actually occurred on the channel, and then use those to identify good areas to be buying into these cryptocurrencies. So if you're new, make sure you hit that subscribe button, get the likes up to 10% of the views if you can. If you have that opportunity, just to tap that button, really appreciate it. It goes a long way to helping out the YouTube channel. This is your cryptocurrency Hopium free channel on the nets, although you do get the titles that are filled with that beautiful hopium that we know and love out there in the crypto space. So warning to us all, dead cat bounces, they are the cryptocurrency, or they are the bouncers that take our money away. So they're not cryptos, but they are the bouncers that take our money away in these cryptocurrencies. So let's first cross to the fear and greed. We are starting to get that move out. As I mentioned in the intro, we're at 28. 21 was yesterday, extremely fearful. We're up to 28. Maybe we get some higher lows. Well, maybe we'll get some higher highs on the breakout, looking forward to tomorrow, which could be into this dead cat bounce. Essentially, dead cat bounce is where the market drops, bounces up, doesn't get to the previous all-time high or a long way from it, and then starts to fade again. But in terms of the fear, we are starting to get some slightly higher lows. So the fear is starting to subside in the market. Doesn't mean that we're out of the woods just yet, but it's a good positive outlook at this point. Now, also looking towards the cryptocurrency market caps. I did mention the dead cat bounce. Now, all I'm doing here is just as a quick look. If you're new and you want to see what's going on across the board, bring up something like the CoinGecko, CoinMarketCap, and then you can look down the 24-hour list, because we just looked at the fear and greed. We knew it was fearful yesterday, extremely fearful, and today we're back to fear. Maybe we're trying to creep up into that neutral stage. So 24 hours, you can see that we've had that little bounce, 2%, 3%, some even doing a lot better, like Doge at 16% and AVAX at 11%. But generally speaking, it's kind of that 2 to 4% with the odd outlier coming our way. So looking at the examples here, something that I talked about on the channel burned very cleanly into my memory, especially at the time when Bitcoin crashed. This was April, the top. We had the drop into late April, then the higher or the lower high. There's you got the all-time high and then the lower high. A really good signal here is that the greed got extreme. The greed was very high compared to the all-time high. And that generally happens in the reverse as well at the lows. We had extreme fear on the 4th. And then just a couple of days ago, we're extremely fearful again. Even yesterday, extremely fearful. But the price is nowhere near that low. We specifically went through this on the channel during September as well, which is another good time. We had that extreme fear on the 21st. Receipts are there. The videos are on the channel. So make sure you're subscribed. And if you want to stay up to date with this in real time, there's the Patreon link down below for all our members, Patreon and Premium, to learn about cryptocurrency trading and investing. This is a really nice signal. You had the higher low on extreme fear, yet the market takes off from that point. Now, do I think this is going to happen? I don't think so at this stage, because this move down is a lot longer than this previous move. But we're here to talk about dead cat bounces and how much they can ruin new investors, because everyone's still extremely excited from what's previously happened. Take Matic as an example from May. This one is burned in my memory. I use that as an example quite often because I was not buying Matic on the 23rd, and there was several comments of ripping myself apart, saying you should have bought it, you missed out on 200% here. If you were trading this for 3 days, that's a good trade, that's an amazing trade. But I can guarantee the majority of people were buying it and then holding it all the way back down over the following few months. So that's a really big dead cat bounce. It gets you into the trade, maybe buying towards the highs because you think it's going to break the highs again. And then the energy just gets sucked out of the market. You get another bounce, sucked out, another bounce, sucked out, sideways, and then the capitulation into the lows. Meanwhile, we're looking for that accumulation. Another clean example on this is Bitcoin. So you had the drop, dead cat bounce, extreme greed happened here, and then you get the final dump into the lows. Market goes sideways as it accumulates. The whole idea here is to find these areas. Now, the typical thing here is that a lot of people want to sell the top, buy the bottoms. And we all want to do that. But for this style of trading, we don't need to be buying the bottoms. You just need to buy the breakouts and then start to sell when the greed gets really high. Start to sell. You don't need to get everything. The only idea I look for here and stuff that I share with the members is you just want to take a beautiful big chunk out of the middle of the market. If you think that's too much for you, I've got another option, which is our video sponsor today. Really clean option. But if you think that's too much, it's too much work, fair enough. But the idea here is that you don't need to be buying all of these lows. Although we had the fear and greed plan buying in through 36,000 as an average price, the breakouts are really good. It just needs some more patience in the market. So let's use Atom as another example. So we've got some extreme examples like Matic, where we can see what happened on Bitcoin. Patience is required. Now you get the option of when this doesn't work and it starts to break down. So we're still looking for the accumulation. So Matic broke out, something that was a good trade on the way up, but of course came all the way back down, and we didn't even get a support until it came back to the level of the breakout. Dead cat bounce. Then we fell through the 50% after it tried to hold the line here and then fell back through, rejected at 50%, rejected again at 50%, and you can see it now starting to break down from the support levels. So this is one of those cryptos that I would definitely be waiting to see some accumulation and then buy on the breakouts. So we're just looking at examples here for this coming stage so that we can get into some cryptocurrencies, make those 50,000x returns and not get suckered into each of the drops. So I bring up those examples because sand has been an extremely popular one. Now you can start to see the patterns here. You can see the market get absolutely extremely greedy on the pump. We go back to Matic. You can see the same deal happened here on the pump. And it gets, if I can get my drawing tool out, it gets the dump come in. Now, the difference with sand is that it hasn't had a bounce yet. And so this is looking extremely weak because there hasn't been a bounce. So the note here is, let's see if we get that dead cat bounce into some highs. Honestly, when you see these patterns, I rarely ever see these things bounce or drop, then bounce away, and then take out new all-time highs to go on to be something absolutely great. Take Matic. Bounce, the dump, the bounce, and it doesn't take off again because the energy is gone. So we can have some patience with these cryptocurrencies. Now, the crypto that I'm looking at today for the video sponsor is Invictus Capital. We can see the performance here. And the idea here is that if you don't want to be trading cryptocurrencies in and out, they're a crypto 10 hedge fund. So they hold a basket of 10 cryptos rebalanced weekly, and it takes the biggest movers. So it brings the big movers in, it brings the losers out, and continues to rebalance between those cryptos and a USD position. Now, the beauty here is because it's just one crypto that you hold, you're not paying taxes on all of the trades that are going in and out. You just hold one crypto that does all of the hedge fund trading for you. And like I can see here, over the past month, using this as an example, it's down 14%. If I go to Bitcoin, if you just held Bitcoin in the same period, it is down about 20%. My Bitcoin chart's refreshed, and from the 15th to the 15th, it is down 24.6%. Now, if you look at the total market cap as well, 15th down to the 15th of December, 21.83% on the total market cap. So for Invictus Capital's Crypto 10 hedge, it's down 14%. Now, of course, you can make much bigger gains if you just bought and hold something like a sand and just knew not to ever sell out. But the sad fact is that most people aren't going to do that because they get fearful when the times are fearful and they sell out, and they get extremely greedy and start to buy more, and they don't hold their portfolio the right way around. So that's why something like this is helpful. But of course, always do your own research. If you believe holding Ethereum or Bitcoin is much better than something like this, then stick to your plans. This is just an idea for some people who are interested in holding one crypto which looks after a basket of the top 10 and continues to rebalance on a weekly basis. So back to the cryptocurrencies and looking at how we can get into the markets and wait for those times where the market has finished dumping, does its accumulation, and bounces back out. So I'll use Matic as the example again. This is Matic against BTC because we've looked at the dump, looked at the accumulation, and then the breakout occurs. And so I'm looking at the breakout here above the 3,600 Satoshis. You can see the breakout. Now, of course, this can fail again, just like Atom. You see the break up, that's a good entry, and then it comes back down. So never let a profit turn into a loss. And for Atom that I was holding, I specifically had to sell it this time because I didn't want my profit to turn into a loss. It's one of Gann's rules, and it's what we follow. It's what I mentioned out to the members. All the trade alerts that happened in my portfolio, I put those out to the members in Patreon. So if I look back at Matic, at the moment, we're looking all right. Now, on a smaller term time frame, the dead cat bounce could be in play again. So you can see this low that came in, and now we're starting to get a move up into the 50%. So I dare say that we might get rejected at 4,300 or 4,400 Satoshis and then come back down. So at this point, it's up to me. It's up to my plan whether I want to continue to enter or exit the trade. So it depends on my time frame. Is this a longer term trade or is it a short term trade to make a few little gains and get out, keep my capital safe? That's going to come down to your own plan and how you see the market moving forward. So keep in mind where these dead cat bounces are. They can be on the bigger time frames. They can be on smaller time frames. But long and short of it is you want to see the accumulation. At least that's the way my plan works. So obviously always follow your own plan. This is just something that I'm sharing based on how I trade the markets. And I like this. I like to see these breakouts occur and then enter on the momentum of the breakouts for my shorter term to mid-term portfolios, as opposed to my longer term portfolios like Ethereum, where I'm happy to be buying on these dips, knowing full well that it can go lower. So that's how I split those up. My longer term, Ethereum, Bitcoin, I want to be buying these dips up and hold those for the long term. The shorter term stuff I'm using to get more Bitcoin and ETH. So that's how I'm balancing those two things. I want momentum on the small stuff. I want big dips on the bigger stuff of my portfolio. That makes sense to you. Make sure you smash that like button and drop the word Doge is the bomb in the description down below in the comment section. Like it up, subscribe if you haven't already. Doge is the bomb. I'll see you guys at the next video or in the Patreon group with the rest of the members over there. Remember, check out the links. I'll see you guys at the next one. Until then, have more fun to get more done.